Yes, sir. Start over.
Okay. Hello guys and welcome to Legacy IAS. Today we are here for the session of the Union Budget 24-25. As we speak live over here, the budget is in a process of being presented. A lot of it has already come out and a lot of it is about to come out, which will happen during the course of this session. So let's start the dissection of the Union Budget 24-25 with the special focus or with reference to our UPSC preparation. Now this is such an important document then that it will be useful for your prelims, for your mains and also for your personality test. Now the trick over here is to understand how to best utilize this document for your preparation. So first things first, budget will have a lot of facts and figures, a lot of numbers, these many lakh crore, these many thousand crores. All those things are not required to be studied or mugged up. Just a general trend of increase and decrease of the budget in a particular section is all right. But apart from that, a lot of facts is as such not required. Having said that, let us first understand how and what to study in the budget. Okay, let's start very firstly with this. So if I have to say how to study, I said no facts or numbers to be mugged up. Okay, this is not required. Then what is required? What is required is the schemes that the government mentions, the increase in important sectors, the decrease in of budget in the important sectors, the focus area of the budget. All these things are required and that is exactly what we will see today. Apart from that, one more important thing which is there is the static part of the budget. Okay, so this is basically the current part. Current part means with reference to 2024 and 25, what this budget specifically holds, and static part means the concepts as in what is budget, which article of the Indian Constitution talks about it, who presents it, how is it presented, what are the constituent elements of it, what are the different types of deficit mentioned in the budget, right? And what is actually its name? We say that budget is being presented and there is a constitutional requirement for the budget to be presented. But very interestingly, the term budget is not even used in the Constitution. So then what is it called? So all these static concepts and static theory also we will understand, and then we will go on to the current aspect, that means this year's budget. All right, so let's start with the static part first. As I said that the word budget is actually nowhere used in the Indian Constitution. Then what is it actually called in the Indian Constitution? It is called as the annual financial statement as per Article 112 of the Indian Constitution. Very important. These kind of questions are asked in prelims. In fact, in polity, a lot of questions are like, which of the following words are not mentioned in the Constitution, not explained in the Constitution, but mentioned in the Constitution. So this becomes very important. Now, this is what it is known. Now, who brings out the budget? Or as in, who makes the budget? So the department that makes the budget is the Department of Economic Affairs, right? It is under the Finance Division. Finance Division of whom? It is under the Finance Division of course, the Finance Ministry. So Department of Economic Affairs brings out the budget, which is under the Finance Division of the Finance Ministry. So this is how the budget is prepared. Now, after preparation, what happens? The budget is presented. So where is it presented? It's presented in the Parliament. So who calls upon for the budget to be presented? That is one thing. And second thing is who presents the budget. Please understand, these two are again two different things. I may be presenting the budget, but I was asked by someone else to present the budget. So the person who asks me to present the budget is the person who is calling upon The person to present the budget, we'll see who's that. That person is the President of India. President of India calls upon for the budget to be presented. And who that president calls upon? That means who will be presenting the budget? That is your Finance Minister. Okay, so in prelims, when the question is there, make sure you read it properly, whether they are asking who calls upon for the budget to be presented, or they are asking who is presenting the budget. So that needs to be very clear. Now, what is budget all about? The budget, in a very simple manner, if you need to understand, see, at your home, there will be people who will be earning, probably you are also earning. So, if you have 4 people, for example, let's say all 4 of them are earning. So, income X, Y, Z and A, these different incomes are there. What do? You add all these income and then it becomes the income of your household. The total income of your household. If you know this, then based on the total income that you have, you will plan your expenditure. So you will have some expenditure, right? Meaning, see, where you will spend the money which you have got over here. So the from where you will get the money, that is your salary, your profits, etc., and where you will spend the money. When you plan all this, the planning of from where you will get the income and where you will spend it is nothing but budget, or you can call it the budgeting process. So the planning is the budgeting process. Once you have planned and then documented, that particular document will be called as the budget. Okay, so planning from where the income will come, where the expenditure will happen is the budgeting process. When that budgeting process is documented, the document is called as the budget. Now, when you spend money, see, you can spend money to buy a house, you can spend money to give to a maid, you can spend money to give to the tuition teacher of your children, or to yoga teacher, etc. So you can spend money to buy an asset like a house. You can spend money on a recurring activity like payment to the maid every month. So there are 2 different types of expenditure that the government talks about. One is the revenue expenditure and the other is the capital expenditure. So your budget will include revenue expenditure and capital expenditure. Now, for you to be able to do these expenditure, you need to ensure that you get money. So from where you will get money? The government will get money as revenue receipts or capital receipts. Okay. Now, it is not necessary that only revenue receipts can be used to do revenue expenditure and only capital receipts can be used to do capital expenditure. It's nothing like that. The total receipts, this becomes the government of India's total receipts. So this will be our total receipts. This total receipt the government can spend as and how they want to on different types of expenditure, that is revenue and capital. This revenue and capital expenditure together will constitute your total expenditure. So what is budget? Budget is all about understanding from where this total receipts are going to come and where this total expenditure will be done. Now, why is this important? This is important because the money is limited, right? You may do budgeting at your house also. Why? Because the money is limited. Assume a situation where there is an unlimited supply of money. So if there is an unlimited supply of money, do I need to plan what I need to do, what I need to buy and how much I need to save? No. Infinite amount of money would, completely render the budgeting process useless because you have as much of money as required. But since money is limited, that is why you need to plan, because there will be different sectors and you cannot give a lot to each and every sector. If you are to increase spending in a particular sector, you may either be required to increase your revenue. If revenue is not increasing, then you might be required to take away from some other sector and reduce the money supply in some other sector to increase the supply in some other sector. So there is always a trade-off. For example, we need to see if we want to spend more in space research or we want to spend in social sector schemes. We'll spend in both. But if here we are spending, many people say why to spend in space, completely spend in poverty, hunger, illiteracy. But then in space also we have to spend. Why? Because space research is a technological advancement which actually helps social sector as well. Very simple example is the geostationary, the geosatellites which are there, the mapping satellites which are there. It helps in agricultural development. So here social sector scheme may be a short-term approach to remove hunger, poverty, etc. But doing space research can be a long-term approach to end hunger, poverty, and increase the productivity of the agricultural sector and many other things. Not just that, India has started earning revenue from its space research, and development. How? We are putting other countries' satellite into space. Why other countries want us to do that? Because India's requirement of money is very less to put the satellites in the orbit. So we are earning money also over here, right? But of course we cannot spend as much as we want. We always have to look at other sectors also, so the expenditure will always be limited. And because of this limited nature of money, budgeting or planning of budget becomes very important. Okay, now this budget is presented in two parts. We should know this also. Part A consists of macroeconomic, write down, macroeconomic part, which would talk about the schemes, which would talk about the focus area. Basically, in general, telling you where the focus of the government is. Talk about the schemes, talk about the priorities and focus area, and the announced allocation. So this is from the bird's eye view. What schemes are going to come? For example, right now also, our finance minister has mentioned that 5 PM schemes are going to come, which is linked with education and development, and the allocation for that is 2 lakh crore. So this is a part of your part A, that is the macroeconomic part, consisting of various schemes, focus area, and the announced allocation. The second part deals with finance bills. Why finance bills? Because where does the revenue of the government come from? The revenue of the government comes from the taxes. Of course, fees, penalties, all the registration fees, etc. are also there, but the major chunk comes from the taxes. So the government needs the authority to tax us. That authority comes from the finance bill, which is passed every single year. Every single year it passes. So second part consists of the finance bill, which needs to be passed by the government, which easily gets passed because a simple majority is required and the government in power has the majority, so it passes. If, for example, this bill fails, that means the government is losing the confidence and may tumble down. And the no confidence motion may then be passed by the opposition and the government may fall down. So that, if that happens, the government may go and fall down as well. So this does not fail as such, because only a simple majority is required and the government has this simple majority, right? So this is a bit about the static part of, if we have to go a bit more into depth, so we need to understand, break down the government budget so that you know the important constituents of it. Now this government budget can be divided into revenue budget and capital budget. Now this revenue budget and this capital budget would be further divided. So revenue budget can be divided into revenue receipts and revenue expenditure, which I told you. Capital budget can be divided into of course, capital receipts and capital expenditure. Now, revenue expenditure is straightforward. We need not necessarily divide it into anything else, but this revenue receipt can be further divided into tax receipts and non-tax receipts. Okay. Now, in tax receipts, what we have? Direct taxes, indirect taxes. Now, in direct taxes, it's your income tax, it's your corporate tax. In indirect taxes, majorly your GST and all is there, right? Plus non-tax receipts. In non-tax receipt, you will have fees, penalties. You know, if you are getting a traffic challan, so you pay a penalty, a punishment amount, a penalty, right? That penalty becomes the part of the non-tax receipt of the government of India, right? You pay certain fees. What fees you pay? You pay registration fees, for example. You are buying a land, you are buying a house, you get your house registered. So all this would be again under the non-tax receipts. So this is how the breakdown of your budget is. Now this budget consists of few deficits, which is very important. First, let's understand the different types of budget then can be there. Types of budgets. It's a very simple type we are understanding here. First, the budget can be surplus. The budget can be deficit. The budget can be balanced. Now, surplus budget means your revenue is more than expenditure. That means you will be left with some amount of money. So here, revenue greater than expenditure. Deficit budget is the opposite. Revenue will be less than the expenditure. Balanced budget is, of course, you might have guessed it already, revenue is equals to expenditure. Now, what do you think? Which kind of budget would a country want? Or let's forget country, we're talking about India, so let's stick with that. What kind of a budget would you want for India? See, please understand, for our household, for our own house, you may want a surplus budget. For our own house, you may want a surplus budget. You may want a surplus budget for a household. Okay, and that's fine. And you may think that should be the case for India also. Absolutely not. For a developing country like India, the budget should be a deficit budget. That means we are not going from the perspective of revenue and saying revenue is less than expenditure. We are going from the perspective of expenditure and saying that expenditure should be more than revenue, so that it's a deficit budget. Why so? That is because imagine a scenario that government's revenue was, let's say 50 lakh crore and government's expenditure was 45 lakh crore. So there is a surplus of 5 lakh crore, meaning a surplus of 10%. Would you like this situation to happen in India? Absolutely not. Why not? Because this means that the government has additional money but still not spending, and still people are dying, still people are hungry, still people are unemployed, still people do not have improved skills, still healthcare facilities are not there, still proper road, proper water, proper facilities are not available, and still the government has the money. So that would sort of be a very unethical, thing to do, to have such a huge amount of surplus and still people facing the problems. That is why the situation should rather be like this. 50 lakh revenue is there, your expenditure is 55 lakhs, all right, and you don't have a surplus, you rather have a deficit of 5 lakhs. That means the government exhausted all the money it had, but in addition to that, the government borrowed from others, borrowed from the market to spend on people, the facilities for the people. So this is going to be ethical, right? Because that we saw would incline, borderline unethical. You have the money and you're not spending and people are dying. So that would not be the case. This will be the case. That is why I said that the budget should be a deficit budget. Deficit means revenue is less and expenditure is more. Now, since we have talked about deficit, now let us understand different types of deficit. So the very first is the revenue deficit. We'll start with the revenue deficit. It is the easiest one. Revenue deficit is very simple. It is revenue receipts minus revenue expenditure. Revenue receipt minus revenue expenditure. Now, in addition to revenue deficit, there is a concept of effective revenue deficit. See, revenue deficit simply takes the entire revenue receipt that you have got minus the revenue expenditure. Now, effective revenue deficit means revenue deficit will be here. Revenue deficit minus, see, understand, in this what is happening? Revenue deficit, you have said it's revenue receipts minus revenue expenditure, but some amount of revenue expenditure of the government of India goes to the states for the things that are capital expenditure. So basically, when the government gives money to the state governments, right, when the central government gives money to the state governments, the entire money is taken to be as a revenue expenditure, but some part of it the state governments utilize as a capital expenditure. So in effective revenue deficit, that part which is utilized as a capital expenditure needs to be subtracted from the revenue deficit in order to get the effective revenue deficit. Therefore, your effective revenue deficit will be equal to revenue deficit minus revenue expenditure used as capital expenditure by state governments. This is the amount you have to subtract. Used as capital expenditure means used for creation of, capital expenditure is what? Any expenditure done to create an asset, used for creation of an asset. Basically, the definition of capital expenditure is any expenditure that either increases your asset or reduces your liability is a capital expenditure. So any such kind of expenditure done by the state government needs to be subtracted from the revenue deficit in order to get the effective revenue deficit. Okay, now second is your fiscal deficit. Fiscal deficit. Fiscal deficit, sorry. Fiscal deficit is equals to revenue receipts plus, in fact all the entire receipts will be there. It will be total receipts. Why? Total receipts means the revenue receipt as well as the capital receipt. So you can write it total or you can write revenue plus capital also. Okay, total receipts, or you can write first total expenditure also. Total expenditure minus revenue receipts plus non-debt creating capital receipts. This is important. Okay, in fiscal deficit, remember, We are not directly saying total expenditure minus total receipts. We did not say that. This is wrong. Then what did we say? We rather said it is total expenditure minus revenue receipts. Total receipts would have been what? Revenue receipt plus capital receipts. But we have not added the entire capital receipts. We have added only that capital receipt which is non-debt creating. That means when you are getting that capital receipt, there is no debt which is created on you. You don't have to return. It is yours. So only that amount we will include. If we are taking borrowing which we have to return back, we won't include that. That is why fiscal deficit equals total expenditure minus, in bracket, revenue receipts plus non-debt creating capital receipts. Now the next and the most important part which we focus on, which the government focuses on is the primary deficit. So primary deficit is actually derived from fiscal deficit. What does primary deficit means? It means fiscal deficit minus interest liabilities of Government of India. Fiscal deficit minus interest liabilities of Government of India. Now, why are we doing this? We are doing this because to get a better understanding of how the economy is working. See, what can happen is, for example, your parents might have taken huge amount of loans and that has not been paid. Now you are working, you are earning salary, and let's say you are repaying that loan. Now since you are repaying that loans, so a lot of money is going there. So if you just look at your total revenue and total expenditure, you may not be saving anything and you may think that you are earning very less. So you are not that capable, your potential is not that much, but that may not necessarily be the case because a lot of money is going to repay the loans which were taken beforehand, years back, right? So to understand your actual performance, you need to eliminate that expenditure and then see what is the present performance of yours. That is why we remove the interest liabilities of the Government of India, because these are the interest liabilities on the loans that the government has taken previously. So to understand the performance right now, we understand it with the primary deficit, which is equal to fiscal deficit minus interest liabilities of the Government of India. All right. So this basic static part of the budget you should know. Now, having understood all this, let's now dive into this year's budget and what all have been announced so far, what all schemes have been announced. The names have not come out, but schemes in what sector, etc., etc. Let's start seeing them one by one. Now, the finance minister started directly by saying that, okay, and that is true also. See, historically it has been seen that there have been slowdown in the entire world, but India has still been resilient. Why we have still been resilient to the economic slowdown throughout the world? We have faced a bit, but we are still resilient because of the huge population, which creates huge amount of demand. That is why our economy still keeps running quite well, right? But still, there are issues, there are risks of the global issues, right? So let us see what the finance minister started with. Finance minister started by saying that there is a downside risk, and there is an upside risk. See, all these things would be important for your prelims, at the same time very important for your mains answer writing, to use these words, terminologies, arguments, rationale, thought process, schemes, etc., etc., to make your answers better. So finance minister said there's a downside risk. Downside risk, basically global downside risk and global upside risk. Not happening because of us, happening because of the rest of the world, which we have to address. This does not affect us, so we have to also take certain steps. But this is happening because of the rest of the world. So what is this? What is the global downside risk? Meaning the downside or reduction in growth. See, the world is slowing down. The growth of economy in the world is slowing down. Apart from few exceptions, exception is India. and some other South Asian countries as well. A lot of developing countries are also an exception. But the developed countries, the Western world, the so-called developed countries are slowing down. So there is a global downside risk for the reduction in the growth. What is the upside risk? The upside risk is that of inflation, meaning there is a chance of increase in inflation. So we have to tackle both. We have to tackle the slow growth of the world and the increased inflation which may come. Now, what is the focus area of the government? The finance minister clearly said that the focus area would be Garib, that is poor, Mahilai, that is women, Yuva, and Annadata. So this is poor, women, youth, Annadata, that is. So basically, if you are not poor and not men and not youth and probably not a farmer, does that mean there is nothing for you? That is not the case. That is not the case. It simply means that there is a special focus on poor, women, youth and farmer simply because they needed more. They needed more. Poor of course needed more, women of course needed more because of double jeopardy, etc. Farmers of course needed more. What about youth? Youth for a lot of things, for example, sports, for development, to utilize the skills, to grow the economy, to achieve the demographic dividend of India. So youth is also there. Okay, so these are our focus area. Now, the third thing that was mentioned was PM scheme package. There is a PM scheme package coming up which will have 5 schemes. The allocation for this is 2 lakh crore. Now, what is this scheme all about? The scheme is all about let me write the other word first. It is all about skill development and employment. See, what problem India is facing? India is facing a problem of employment, correct? But that is not the problem. It's not that jobs are not there. Yes, jobs are not there, but everyone is not unemployed because jobs are not there. See, the reason for unemployment is twofold. In fact, 3 reasons. The first reason is less jobs. The second reason is issues of absence of skills. There is no skills. And the third is mismatch of skills. Now, what does this mean? Jobs are less, people are not skilled, and if people are skilled, they are skilled in some other things. The job is of some other nature and the skill is of some other nature. So by this scheme, the government will have job-oriented skill development, understanding what is the requirement of the market, skilling you in that, and then providing you employment. And the corpus of this is 2 lakh crores, which will be done through 5 schemes. I hope that's absolutely clear. Then the government has come up with 9 priority areas or focus areas. 9 priorities, write down quickly. You should just know that if they are asked in prelims option, you should be able to identify them and answer them correctly. So the very first thing is productivity and resilience in agriculture. Now, how does the government aspire to do this? By increasing the research and development in agriculture. See, productivity, you cannot suddenly increase the land. Even if you increase the land, you still need to increase the efficiency, productivity, right? So, government will focus on research and development in agriculture field in order to increase the productivity and make the agriculture resilient to climate changes, etc. Second is employment and skilling. So employment and skilling would majorly be done through the present ongoing scheme, of course, but also the 5 PM scheme which is in the pipeline. Then there is inclusive human resource development and social justice. So this is a very holistic point. Why holistic point? Because they have talked about human resource development. Human resource development means developing the capability. How does a population get converted into a human capital? It gets converted into human capital with the help of education, skill, health. When all these three things are there. So human resource development will consist of things related to education, skill, as well as health. That is why it is a very holistic point. I hope that's absolutely clear. Then there is manufacturing and services sector. Manufacturing and services sector. So see, the government has very nicely covered all the three sectors. The first one was agriculture, and here the secondary sector manufacturing, and the tertiary sector services. So all the sectors are actually covered over here. Then you have urban development. Urban development. In urban development, what the government is planning to do is planning to increase the allocation for housing in the urban area through PM, Pradhan Mantri Awas Yojana. So in urban, the main focus would be on housing, and a lot of money corpus would be invested over here. Then the sixth one is energy security. Energy security. So not just ensuring enough amount of energy is available, but they are available from non-fossil fuel sources. So basically, focus would be there on renewable source of energy rather than non-renewable sources of energy. Then there is infrastructure. Infrastructure would always be there, because everything you do, any point you talk about, infrastructure would be required. Infrastructure is the prerequisite which is required in every sector. So infrastructure is there. Now here also the focus will be on PPP model. PPP model, that is public-private partnership model, meaning the investment from the private sector would also be huge in this. All right. Then you have innovation and research and development. The government is focusing on this also. This is very good. And then finally, next generation reforms. Next generation reforms in economy. You know, the simple example could be, are we thinking towards 100% capital account convertibility, all these things to attract more FDI, etc., etc. The next generation reforms the government has talked about. This, I said, would be done through the productivity and resilience of agriculture would be done through agricultural research. Employment skilling through the Pradhan Mantri 5 Pradhan Mantri scheme package. Okay. One very interesting thing of this Pradhan Mantri scheme package we will see, and that is a very good thing to be done. We'll see that as we come. So let's see it right away only. So what is a very interesting thing of this Pradhan Mantri scheme package for skilling and employment? So what they are doing here is, first they are ensuring that they will be skilling you as per the requirement of the jobs that are available. That's point number one. Point number two, special focus. You know, we always face a problem. We are freshers and everyone is asking experience. We have no experience. What to do? You need to get first job. First job you need to secure in order to get experience. So what do you do about that? So this scheme One of the scheme under this will be having special focus on first timers, people who are getting job for the first time. And to facilitate that, see, still you have to incentivize the industry to hire freshers or first timers, or you can, the better word would be here, freshers. So how do you incentivize the company? You incentivize the company. The government is saying, if you hire the freshers, rupees 3,000 per month for 2 years in the EPFO, Provident Fund account of the employee. You know, how does the Provident Fund work? If 5,000 is, invested by the employee, the other 5,000 is given by the employer. The employer matches your amount. Just an example. Let's take a smaller example over here. So let's say if 4,000 employee is giving, 4,000 employer is also giving, so the total is 8,000. So the government is saying, if you employ freshers, the government will provide rupees 3,000 per month for 2 years under the EPFO. So this burden of 4,000 would be reduced. 3,000 would be given by the government. Rupees 3,000 by Government of India per month for 2 years to the employers. So what is happening? It is reducing the burden of the employer by 3,000 rupees per month for 2 years. And after 2 years, what happens? The person is now having experience. So now is more capable of getting job elsewhere also if this company is not ready to take them, but they can continue or search for job or take job elsewhere also, because now they have experience. So special focus on freshers is of course there. Then the government has also come up with scheme of soft loans for higher education. So this loans would be up to 10 lakh for higher education. This loans would be up to 10 lakh for higher education. Now what do you mean by soft loans? Soft loan means low interest rate. Low interest rates. Okay. Plus, what else has come? Now remember, there was a Pradhan Mantri Mudra Yojana. Now in that Mudra Yojana, basically the government gave money to the small and let's say small businesses to start, for the small businesses to start. Now in that case, what happens is, the present allocation was Pradhan Mantri Mudra Yojana. The present allocation was divided among Shishu, Kishore and Tarun. So Shishu loans were up to 50,000 rupees. Kishore loans were 50,000 to 5 lakhs. Tarun loans were 5 lakhs to 10 lakhs. Now this was the situation. Now the government has increased the limit increased to 20 lakhs. Limit increased to 20 lakhs. Okay. Now, how did the limit increase? The limit increased to 20 lakhs, not for everyone. Now, everyone cannot go and let's say take a loan of entire 20 lakhs. Then who are eligible for that? The people who are eligible for that are the ones who have repaid the Tarun loan which they had taken. So this increased limit of up to 20 lakhs is for people who have repaid Tarun loans. So they would have already taken up to a limit of 10 lakhs and they have repaid it. Now since they have repaid it, now they can take up to 20 lakhs now. Okay, only these people, of course, not everyone. Now, another focus area of the government they are saying is, very important focus area, increasing women or female labor force participation. Female labor force participation. You know, the government had come up with a Maternity Amendment Act. In that Maternity Amendment Act, I'm not saying that this focus is because of that, but you need to understand how positive things can have negative implications, and then you need to address those negative externalities. So based on that Amendment Act, what happened is government increased the maternity leave from 13 weeks to 26 weeks. Now this is a very good thing that the paid leaves have increased from 13 to 26 weeks. But what is the problem here? The problem here is the fact that because of this increase, earlier the industry needs to give 13 weeks of paid leave. The person is not working, you're still paying them. Now they have to give 26 weeks of paid leave. The person is not working for 26 weeks and you still pay them, because of which there is a chance that the company would be reluctant to hire the female in the first place. So what can happen? The female, because of this, the female labor force participation can go down. All right. So this is a negative externalities of this particular thing. So anyway, this is one concept. And now the government is focused on increasing the labor force participation of the females. Then further, you have basically one more thing is there was requirement or request from Bihar state to allow it to take assistance from multinational, multi-organizational banks. So that has been approved. That is one thing. Then Andhra Pradesh is, let me write it completely. It can mean Arunachal as well as Andhra. So let us write completely. Andhra Pradesh's Polavaram project. Andhra Pradesh wanted the government to finance its Polavaram project, and the government of India has accepted that, and now Andhra Pradesh's Polavaram project will be financed and completed expeditiously. What is this Polavaram project? This Polavaram project is basically a multi-purpose irrigation project on Godavari River. On the Godavari River. Now, so limits have been increased. Special emphasis has been given on rural development and 2.66 lakh crore. So as per the present outputs, 2.66 lakh crore have been allocated for rural development as well. Now, this does not mean the entire allocation is only this much. There are certain things which are not taken into rural development, but let's say agriculture, etc. But that would also be helping in rural development. Okay, so rural development in general comprehensively would be much more than what it shows over here. Now, the fiscal deficit target, you know, we wanted to have our fiscal deficit at around 3 to 3.5%. We wanted to have our fiscal deficit at around 3 to 3.5%, but it is of course slightly increasing in the sense that it has gone beyond 3.5%, and the fiscal deficit target of the government of India is now set at 4.9% of GDP. 4.9% of GDP. Then, with respect to energy security, a very interesting scheme. With respect to energy security, as I said, focus will be on renewable sources of energy. So with respect to energy security, you have the scheme Surya Ghar Muft Bijli Yojana. Surya Ghar Muft Bijli Yojana. So Surya means sun, Ghar means house, Muft means free, Bijli means electricity. This does not mean that this is the English name. I'm just translating it because it's completely in Hindi. And Yojana is scheme. So what is this scheme all about? Surya Ghar Muft Bijli Yojana. So they are wanting the people to, put solar rooftops on top of their house. So if you do that, then you will get 300 units of free electricity per month. So basically your Bijli bill, electricity bill problems are sorted if you can do that. Now, so this is very interesting, and hopefully this would be successful. It is a good vision. Good vision is there over here. Like a good vision was there on what we saw. We saw this, I think, first timers, freshers. Helping freshers also to get a job. So these 2-3 things are very intelligently thought of, right? And you can use them in your examples, in your answers. Now, the government has also reduced certain duties, the custom duties, etc. Custom duties generally applied on the imported products, imports. So the government has reduced the duties in gold, in platinum, in mobiles. So if you are wanting to go gold shopping for your marriage, engagement, etc., you can probably after a few days do that, because since the custom duties have come down, the rate of the gold will come down. But still the rate of gold is actually quite high, because in the recent 1 or 2 years it has increased a lot. But still, by the reduction of this custom duty, some amount may come down. See, all gold is not imported, so too much change may not happen, but some amount of change is still going to happen. I hope that's absolutely clear. Now, one very interesting thing the government is doing, and that is also a very welcome step. That welcome step is abolition of angel tax. Abolition of angel tax. What is angel tax? See, in a startup, there are angel investors. So this concept came from the startup investors, that is angel investors. Who are angel investors? Angel investors are not venture capitalists. Venture capitalists are there in the business for sheer profit. That's it. But angel investors invest in a very new startup which is just starting. You don't know what will happen, what will not happen. It's a big risk. Still they are investing. That is why they are angel investors, of course. That is one thing. Second, they are not investing in, for profit motive. Generally, their motive is supporting the idea. Supporting the idea of the startup, supporting the startup, supporting the newbies, etc. That's their idea. But of course, when it works well, they are also going to earn a lot of profit. But still, they are taking the risk at the very initial stage. So that is why they are called as angel investors. Now, these angel investors, when they used to earn, there was for being an angel investor, there was a angel tax which was in place, and people called it a notorious tax, because that is de-incentivizing the angel investors. That is restraint that would deter the angel investor to do the investment. So now the government is saying, don't worry, we will abolish the angel tax. So that is a very interesting thing. Now, another interesting thing the government has come up with is the NPS Vatsalya for minors. See, we now the government in the government sector pension as such, have been gone down. Teachers now don't get pension, etc., etc. Private sector, anyhow, there was no pensions. So there is a pension scheme, national pension scheme. So you can subscribe for the national pension scheme, keep saving some amount. When you retire, you can take that amount with the interest, etc. Now, this national pension scheme was only applicable for people over 18 years of age. Now, the government has come up with, you won't believe, or you will believe because it's fact and I'm stating it. Anyway, they have come up with the national pension scheme for minors. So even if you are less than 18 years, you can still put money in your national pension scheme account. Who will put money? Your parents. The parents can put the money, and when you are 18 years old, the parents would transfer the amount in your name. Now this is something new which has come, that national pension, pension scheme, pension, about pension we would think when we do a job, etc. But here, the moment you are born, if you're less than 18 years, the parents can start investing and then transfer the account in your name when you are 18 years old. So these are the things that have been brought out in the budget. As we move forward, in the coming days, we will cover the specific schemes. For example, we understood about 5 Pradhan Mantri schemes for skill development, employment, then 2.66 lakh crore in rural development, etc. So where exactly that would be spent, how exactly that would be spent, all this we would be seeing, right? So this is what it is all about so far. In the coming days, we will cover specific things, specific schemes as well related to our budget. Why? Because since it's covered in budget, it becomes all the more important for your examination. All right. So this was all about the budget which has recently come out. Study well, make notes of it. It's very important for your prelims. At the same time, it's going to give a huge amount of fodder for your mains examination. Thank you so much. Stay tuned to Legacy IAS YouTube channel. Thank you.